When someone applies for a loan, the lender is going to look at 5 different characteristics to determine if they're eligible. So those 5 characteristics are character, capacity, capital, collateral, and conditions. Character is the most important. That comes first, and what we look at is your credit report. And that topic could last 3 hours, but credit reports measure your trustworthiness and your responsibility. And your credit score takes all of the components of your credit report and puts it into one number. And it changes all the time. There are a lot of components that go into your credit score, but the biggest factor to your credit score is your payment history. So always make sure you pay your bills on time. Set up reminders, set up alerts, make them automatic. Life happens, things get in the way. You shouldn't have to think about your payments. Make sure they're taken care of. Next is your capacity. And capacity is how well you can fit in a monthly payment to your budget. Most people know how comfortable they can fit in a monthly payment, and sometimes they're surprised when a lender says, "Oh, you can afford more," but the lender doesn't know how much you might be paying for a cell phone bill or how much your car insurance is. So capacity is what you feel comfortable in a monthly payment and what will fit into your budget. Capital is basically how much you have set aside in your storehouse. What do you have put away to handle the expected and the unexpected? Most of us cannot afford to pay cash for big ticket items, and so we offer the lender the collateral, or they get to hold a lien on our collateral. And that is a benefit to us because usually that loan is going to have a lower interest rate because the lender is going to hold a lien on it, so they feel more secure because they have a lien against it. So collateral is a car title, having a lien on the mortgage of the home. So collateral is important. And then lastly, conditions. Where I work, we call them compensating factors. These are things that we look for that are going to help support the loan, things that are in your favor. So if you, maybe you don't have a long time in your credit file, but you've had your account with that institution for a long time, and you can show that you've had your paycheck direct deposited, you've never had overdrafts, things that the loan analyst can look at and say, look at all these positive things. So those are conditions. When you have a good credit rating, it'll benefit everything in your life, because having good credit means that you are going to get offers at really good interest rates, which means everything costs you less. So it affects a lot of your life if you're not making good decisions about your credit.